Hey traders, welcome to another episode of Charts and Coffee. Happy Friday, everybody. Wrapping up what has been a pretty interesting week. We'll see what kind of mood the market is in after yesterday's little tantrum on things that we've known for arguably 18 months. But hey, there's the market's logic for you. Treat the market more like a 3-year-old and you'll probably see a lot more predictability, but this is where we are. I am going to continue to be opportunistic in this environment. It doesn't really change my outlook for overall bullishness, where we are macroeconomically in terms of the trajectory of inflation, the trajectory of GDP, and what the Fed's current monetary policy and money printing machine is doing. So let's get to it as we wrap up the week. And let's start off with our first question here. Line Watcher asks, and by the way, speaking of reflation, if you check out yesterday's free video over at the Simpler Trading YouTube channel, you'll see that I did a pretty big deep dive in not only the current positions that I've been setting up since mid-March in the Sector Secrets Mastery and in the futures room, long corn, long beans, focus long on crude and gas. Which one of the two I think we need to ditch for a little while? What I think of oil stocks right now. So check that out. I think it will be really helpful. Not to mention, those of you that like trading the indices of other countries, right? You can play. We don't have to always focus on Dow, S&P, NASDAQ, Russell. I've been long Taiwan for 14 months. We're looking long in Canada. We're looking long. It's an open position that we have right now. We're looking to get long in Australia. Why those are working and why I think they'll continue to work. Check out the free video. I think you'll really like it. So Bitcoin, is Bitcoin now in a bear market? Oh gosh. Well, so, I every now and then I realize that when we are talking about, and this includes whether you're looking at, and I'm going to pull this up from Coinbase. When we're looking at markets, a lot of confusion and even disagreements or reads on the market, a lot of that stems from not the symbol, but rather the time horizon and the time frame. Okay. So I'm giving you a time horizon of months, if not years. I don't have a short-term trading opinion of Bitcoin. And I'm also going to focus on the daily time frame. But let's say you were looking at someone who was a hodler. You guys know that one, right? If you talk to a hodler, they're probably looking at a weekly chart, and every single dip is an opportunity to build a larger and larger position in Bitcoin. You talk to a hodler looking at a weekly chart, this is just a correction, not even touching the 21 EMA on the weekly. You talk to someone looking at the daily line watcher, what they should say, again, my opinion of market trend analysis, which stems from decades of study of what is now known as Dow theory. This is a broken trend. This is distribution. This is not a downtrend. And for those of you that know my work, what have I done? I've sought to try to decode Dow's look at patterns, volume, market structure with a few tools, mostly tools rooted in studying the relationship between the 8, 13, 21, and 34 EMAs, as well as volume. There's nothing here that tells me this is anything more than a market going from trend. Trend is broken, no question about that. But if you studied Dow theory, there's 4 market behaviors, market phases, market trends. And right now, once we've broken an uptrend, a broken uptrend is not a downtrend. It's not a binary up or down. The markets aren't elevators, right? What we have now is distribution. And if you're a fan of a slow stochastic, if you're a fan of a ready aim fire, any kind of oscillator whose job it is to identify overbought and oversold, that's what you got to do now. That's the way I would look at this. So thanks for the question. And I would look for an intraday down 1, 2, 3. I would look for an oversold stochastic. I would look for a ready aim fire to tell me the market's on the way back up. That's what I'd focus on right now. Now, I would not be a bear, and I am not a bear. Crypto is a different psychology, gang. It's a different thing. This isn't talking about Netflix or Microsoft. It's a different animal altogether in terms of that underlying psychology that runs it. All right, next up. Hey there, James Harris. How you doing, my friend? FedEx, sure. FedEx. All right. It's in a buy zone. Yes, it is, but it's a little costly. Is this an example? So costly. And thank you for bringing that up, James. So costly for me, it's going to go based on sort of an average understanding of a lot of option traders are going to be somewhere between even sub 10,000, but say 10 to 25,000 in terms of account value. And that's when you've got to think about, if I'm wrong in a trade, which is the only question that really truly matters at the heart of position sizing, you've got to ask yourself, can I afford to be wrong? Everyone can afford to be right? But you've got to ask yourself, when you put on a trade, can I afford to be wrong? Well, when we're options trading, we have a lot of ways to manage affordability. That's something we talk about consistently in the mastery, in the futures room, when I'm in the options room. What is the budget for your trade? And how much of that budget can you afford to lose based upon your account value, your account size? So in this case, you're right. What would we do? I think there's two things we can do here. One would be at the moderate to conservative zone, which we're starting to trickle down into. I'd be open to put credit spreads on a nice push lower, where I could maximize what I can collect for the puts that I'm going to sell. And then I do realize that the put that I'm going to buy is going to be a little pricey, but I need that safety net there. You cannot leg in to credit trades. However, if you do want to think about another strategy, it would be a debit. I'm with you, the call vertical. So at this stage of the pullback, I would say you're looking at a put credit spread. I would like to see more pronounced weakness, because again, that's going to maximize what we can collect, or the call vertical. Absolutely. And that's one of the ways we can offset the cost and the potential risk of a trade by either collecting credit as the primary mode of what we want to do, or offset the cost of the debit by selling an out of the money call further up, just to alleviate some of that, that burden, that debit burden. All right. So thank you for the question, James. Next up, John asks, what are my thoughts on MARA? So very much related to that Bitcoin conversation, Mara, Riot. These are going to be a very similar conversation. And what's that conversation? Right now, and I am not any longer building my larger position in Bitcoin. That's not been something I've done since 2016, 17. So I've got that. I've got a HODL position. For those of you that don't know what HODL is, that was the original Diamond Hands, right? HODL was a misspelling of what we imagine hold, and it just became its own little meme. But those hodlers out there, like myself, I have a position that I've decided to HODL. So the idea here is, if I want to trade Bitcoin, one more affordable, talk about affordability budget, one more affordable way to do it is track Bitcoin, track BTC USD. I'll usually do it on Coinbase, and then buy Riot or Mara as a proxy to that narrative. I like Mara. It tends to look, look at MARA. Does that not look like that BTC USD chart that we just looked at? And if you want to track it on Gemini, that's fine too. Bitcoin, I'll usually track on Gemini or Coinbase. That's where I have my Bitcoin. But again, if you guys are hodling, put it in a cold wallet. I've had it in a cold wallet now for 4 years, 3 years, 4 years. So my trading usually is on Gemini anymore. But anyways, that's beside the point. Look at which one of those more sensitive to Bitcoin stocks that look more like Bitcoin, and then use that as a proxy. That for me would probably be Mara. So my thoughts on Mara are, when I want to trade Bitcoin, I get a better bang for my buck at a Mara, and it will move with it. So I like it, because I do think once I can see the bottom forming in Bitcoin, which I do not see yet, But once I can see a bottom forming in Bitcoin, maybe a 1, 2, 3 coming up, maybe, then I will look to, or a ready aim fire, slow stochastic. Once I get that, or perhaps even, let's see here. If I re-anchor my V-score to the 28th of February, all right, if I re-anchor the V-score to the 28th of Feb, this is looking actually really interesting now. This is actually looking really interesting at a -2 standard deviation. So we're getting warmer. May not be hot yet, but we're definitely getting warmer. In fact, pretty close to it's time. I'll need a couple candle patterns, maybe an intraday 1, 2, 3 would be great, but 48, 49,000 looking pretty good. That means Mara could be the alternative, the proxy. So thanks for the question. Terrific timing on the question, by the way. All right, so next up is any thoughts on, hey there, Andre, any thoughts on FCX? Well, you guys know I love copper, right? I've talked so much about the reflation trade and how it benefits copper in a, oops, that's not what I wanted. I need a symbol change. There we go. You know, I love copper. Copper, crude. Copper's outperforming crude. We were long copper in simpler futures in terms of what we've been talking about in the premium videos, buying into the pullback of the wave. Now, in terms of Freeport-McMoRan, this is where it gets a little fuzzy, okay? Freeport-McMoRan lost its sync with copper. If you're going to play a proxy, kind of the way I talked about Bitcoin and Mara, if you're going to play a proxy, you have to remember that they've got to still be pretty synced up. I've been leaving Freeport-McMoRan alone. It's probably now not at a bad spot, but here's the thing. When I was trading Freeport-McMoRan as a good proxy to copper, it looked a lot like copper, except for right around earnings, which I will forgive Freeport-McMoRan for some shenanigans, some volatility around earnings. But when we are now punching higher and higher into copper, and Freeport-McMoRan is not tracking, be careful, because somewhere the narrative has disconnected, and that does not make it a good proxy. And I don't trade Freeport-McMoRan on the merits of Freeport-McMoRan. I know we're coming into earnings. Maybe after earnings, Freeport-McMoRan gets its head screwed on straight and starts tracking with copper. Don't love it. And that's why I have not brought that up in the mastery. There's a couple of things that we're having to reconsider and disconnect from for a little while. That is oil stocks, right? The fallout, I believe, of the tech market moving higher is less attention and flow into oil stocks, which was considered a crowded trade. Don't buy into this, it's a crowded trade nonsense. All trends are crowded until they're not, and we don't get a memo. But I do think when we see the rotation back again, when that Ferris wheel of macroeconomic and sector rotation happens, watch how quickly we start seeing oil stocks benefit. We just don't know when that's going to be. But for now, I'm going to push that on the back burner. And just like I'm pushing Freeport-McMoRan, but not crude oil, RBOB gas, or copper. The commodities, which is the pure direct play, is still absolutely fine. So thanks for the question. All right. Next up is, what's my take on Square? So for those of you that have caught the 642 conversation that we've had in the free videos, you probably are pretty aware of what I want to do with Square, which is I've got to start counting down within the window. So if I've got a May 6 earnings, that means yesterday was the 2-week window. And so we're just inside 2 weeks. Today would be pretty much it. If you want to get long some calls, Square, today's pretty much it. Because what happens now is I've got less than 2 calendar weeks, less than that in terms of actual trading sessions that I need Square to fill, which I would argue is happening now, and then follow through into earnings. So today's pretty much the cutoff for my 642 earnings window for playing strength into earnings. Now, some of you might say, Rog, this is not double green. And that's kind of where I was like, meh, I don't love it. It's not a short, but in terms of the criteria that I need to want to play earnings, I'm going to try to go find a double green before I engage in a yellow trend market. Now, yellow comes in the second row down here at the bottom. The wave is telling me there's no trend here. There's some bullish sentiment, but there was bearish sentiment too. So if I'm going to use the initial filter that I teach you all for 642, this is just a pass because of the structure. Okay. All right. Am I bullish Bitcoin? Yes, Glenn. So yeah, I absolutely am. Look, if I believe in the narrative, this is a sale, right? I think that in order to trade something like Bitcoin, there is definitely, unless you're just going to trade it, in which case you don't care. You're not hodling. You don't care about blockchain. You're just trading a market that's moving, and that's fine. I've traded many, many markets in my career that I didn't know anything about, that I didn't really care anything about. I was trading it because the price action was there. But if you're a believer in the Bitcoin narrative, I remember a whole bunch of people going, oh yeah, I'm finally in, and they made their first Bitcoin purchase in the 60,000 levels as a market was going higher. FOMO, don't FOMO Bitcoin, right? I love that you guys are, what I love, and thank you. You guys are asking about it when it's moving down, not when it's making new highs. And that tells me, look, you're on the right path, which is terrific. Okay, so what about Tesla? I'll tell you straight up, gang. There was a 1, 2, 3 that was broken. This is straight up down 1, 2, 3. That was broken. 1, 2, 3, and then there's your break. Do I love how long it took? Probably not. It's a little bit larger. When they get large, 1, 2, 3s are large. They don't have quite the oomph. So you probably want to look at a breach retreat, gang. It's straight up. The only thing that I care about Tesla right now is Tesla has weighting within the S&P and the NAS. This is a mess. And I think a lot of traders would do far, far better finding markets that are trending with the broader averages and the indices rather than the kid that was the popular kid in class last year when it was going to be added to the S&P and having a stock split within a very short window of time. You guys remember why Tesla was up, right? It was up on 2 events, one of which can never happen again. It can't be re-added to the S&P, and it's probably not ready for a stock split. So think about why Tesla was up, and then ask yourself, is that narrative likely again? Tesla's going to have a rally for a different reason. There's got to be a different narrative that's going to benefit Tesla. And I don't see one, I don't hear one, and you certainly don't see it being priced in. There are plenty of other markets that have far better structure than Tesla. For now, I'd say, yeah, look, I wish it well, but right now, the structure isn't there. Is the path of least resistance to the upside? Oh gosh, yes. I'm not in any way telling you guys to short it. I just think there are better buys out there. That's my opinion of Tesla. I just wouldn't waste my time right now until I get a better setup. Okay. All right. The screen that we're looking at, hey there, Kyle, at your workspace bundle, this is actually, well, yes, this is the trading view version of that workspace bundle. Correct. VScore, JT Trend, I make available to members of Sector Secrets Mastery and Futures, VWAP. Yes, this is mostly, yes, that bundle where if you're looking at the VWAP tools, the VWAP Max tools, and actually there's a few tools in the VWAP Max I don't have running on this layout, and then the tops tools. So yes, this just happens to be the trading view version of it. Okay, thank you for the question. What else do we have here? Hey there, Rick. How about corn, beans, and wheat? Rick, we've been long these on and off for months, and the most recent entry was back in March. Check out that free video from last night. I break the whole trade down. Where corn is right now? Cool. I mean, this is why we were long from back in here. Beans. I put a free video out 3 days ago, 3 or 4 days ago about ZS and said, hey, look, it's time to get back on the bean bandwagon. This reminded me a lot of the pattern in Google before it took off. Learn the patterns. Yeah, check out that video. I think you'll really, really like it. Wheat, I typically don't play. Oats, I typically don't play. They're a little thin and they can be a little wonky. But beans and corn, absolutely. You know, if you've been watching the free videos, gang, and joining me for Charts and Coffee for the last few months, you know that I've been pretty much jumping up and down on the table about grocery store commodities. I'm glad people are talking about it right now, but for right now, that train has left the station. I'm not going to momentum trade them at new highs, but we will get a pullback. Look, if you go back to last year where we were buying corn and beans on and off, we'll get another pullback, but please don't buy them up here at the highs. That's what I would say. Now, if you've got a momentum play that you trust, that you like, or you get a shallow correction even to an 8 exponential moving average, terrific. But yeah, sadly, this is one of those situations where people are like, oh, look at corn. I'm so pleased about that. But right now, the timing isn't what you want. You don't want to be looking at these as they're pushing to higher highs, because sadly, no one was talking about corn back in here, and that's where we were building the position. So let's wait for a pullback. But if you have a momentum style, that's what you would have to use right now. Okay. So thank you for the question. I do appreciate that. All right. So let's go ahead and wrap it up, because I'm just flat out of time. Thank you, as always, gang, for joining me for our daily charts and coffee. We're on every day between 9 and 9:20. Sometimes I run over, but thank you for all the questions. Get them in early. I just take them one by one, going down the list. So thank you for being here. Hope it's helping. If you have any questions, leave them in the comments. If you're on the YouTube channel, if you're on the Facebook channel, leave a question in the comments. And lately, we've been doing little video replies. So leave a question in the comments, and someone will catch that, and we'll get a reply out to y'all. All right, I'll see you Monday, okay? Be good to each other.